back on. And so, let me get this up and going here. What is that?
Demos is huge.
Yeah. So just start from the beginning.
Okay, I will. I'll start from the beginning. My laptop's being weird.
I think we should put it in the yeah.
Okay, so here we go. So you guys can see that. And all right. Welcome back. Wasn't that a little bit of a technical nightmare? But very stressful. We worked through. How many people do we have on? Perfect. Everyone's back. So now what I want to do is kind of do a quick review on everything that we've gone over in terms of what to do when we look at a stock. So when we look at a stock, the first thing we say is, what trend is this in? So here we are with Google, and it is trading. Now, first of all, what is our overall trend? So go ahead and when we look at this, we see our overall trend is up. And now we're going to look at, once we look at our overall trend, the next thing we do is we say, okay, so I know the overall trend is up, but I'm looking to get into it right now. So what is it currently doing? What is the best timing? This is where, in our advanced technical course, you learn so much about the exact timing of when to get in. And if you can get in, and think about this, if I can learn to get in when, and this is just one aspect, but when a stock is hitting the ceiling and coming down and then starts to bounce up, and all of that is in my advanced technical course, it really gets into a lot of detail. And I'm going to give you some extra pieces of that coming up here. But if I can learn to do that, then I may be able to save $2 or $3 on every trade. $2 or $3, $4 on a trade. Because if I'm going to get in at the ceiling, I buy the stock, it pulls back $3. Well, guess what? I just lost $3 compared to buying that stock $3 cheaper when it's bouncing off of support, and going up. So that's why support and resistance and technical analysis, that's why I keep saying you've got to learn your technical analysis. So we're looking at the stock. We see it's overall in an uptrend, right? So we know it's in an uptrend. And now, and I want you to pay attention to kind of this area right here, because for the longest time, the stock right through here, it was kind of going ceiling, support, resistance. And once a stock, and I really want to capture this for you so you kind of get a better understanding. Once a stock, so it's trading between, we have support, resistance, then it breaks through that, and it goes to resistance comes down to support, goes up to resistance, down to support, resistance. But here you can see that it broke through this ceiling, and this ceiling became this floor. My resistance becomes my support. Old support becomes new resistance. New resistance becomes old support. And I asked you to write that down earlier. Want to make sure you get that, because that is going to save you so much stress, because what you're able to do then with your advanced technical training, and there's so much more to this, but as we said, technical analysis isn't something you learn overnight. It's an art. It's a skill that is developed and enhanced over time. It's like dancing, right? You get better and better over time. So here, this was my ceiling. It became my floor. It broke through that, and then that was a ceiling, and now we've got a new area of support and resistance. Now, an additional feature that we have on this toolbox, on this website, that no one else has is, here's my question. If my stock trades between support and resistance, if I know that it's doing that, then is there a way for me to make money off that? And the answer is, of course, yes. And why are we in this class? Why are we even here? We're here to do what? To make money. We're here to really learn how to make sure that the third part of our life, our retirement years, that we're taking care of. And no one's going to do that and pay more attention to that than you for your own money. So let me show you this additional feature that I love, and it is exclusive to, it's a proprietary system, but it is our average move up and average move down. And right above the chart, you can see right here where it says average move up from support to resistance. And remember, I said all stocks trade in a trading range. They're all going from support to resistance, support to resistance. They're hitting the ceiling, coming back to the floor. Then they'll break through the ceiling. And when they break through the ceiling, that becomes the new floor, and they create a new trading range. So the question is, average upside move from support to resistance. So this is a proprietary tool. It takes a 13-month time frame, calculates it, and says every time that this stock breaks through every time it breaks through the ceiling, how high does it go, or how far does it go from my support to resistance? So here we can see that with Google, the average move is $139 every time. Now, next question is, okay, so I know the stock just bounced off support, it's going to the ceiling, and it's going to move about $139. Now, you won't capture all of that, but what if you were to capture half of that, right? What if you just got, $70? So you're going to make $70 on a trade. Next question is, how long does it take? How long does it take? And here we can scroll over, and we can see it takes about 8 days. So every time this stock bounces off the floor and goes to the ceiling, it moves $140 in about 8 days. Now, with that type of knowledge, do you realize what you can do? Do you understand the power of this? This now allows you, do you remember how I said the reason I love technical analysis is it's like driving, and it allows me to look ahead of the road and see what's about to happen and prepare. So if I'm driving down the street and a car is about to pull out, I can start to pump my brakes, right? If I see that there's a detour, I can get ready to turn. I know what's going to happen. If I see that my stock is now bouncing off support and it's about to go up, I know, okay, it's going to move how much? About 140 points. It's going to take about 8 days. I can plan and prepare and say, what type of trade am I going to do? Am I going to do a cash spread? Am I going to just do an upward trade? Am I going to do a strangle? What am I going to do? All my different, that's where my education comes in. My trade. Now I see how can I make the highest rate of return with the least amount of risk, right? So that's really what we're after. Now we also can see that the average downside move from the ceiling to the floor is $101. And it takes 6 days. Typically, your downside move is going to be shorter because what do stocks do faster? Do they go up faster, or do they come down faster? They come down faster. Have you guys ever heard the saying that stocks take the stairs up and they jump out the window to come down? And tomorrow, Stacy is going to show you some amazing ways where you can make wonderful, just really high rates of return when the stock is coming down. Today, we're just getting you prepared. We haven't really gotten into how to trade just yet. We've got the charts down. You're getting your education. I'm going to show you how to place a trade in this next segment. But I want to get you comfortable so that tomorrow, when Stacy does the covered call trades, when you're learning how to place those covered call trades, when she walks you through the cash spreads, you're just more familiar. You know how to do this. So we've got support and resistance. We have our average move up, average move down. So that is really what I wanted to kind of share with you so you could see that. Now understand that in that trading range, so let's say that you were just going to buy the stock, and I'm just trying to kind of zoom in right here in this area. So if we looked right here, and the stock has been going up, it hits the ceiling. When it hits that ceiling, would that be a time to get into a stock? Yes or no? Go ahead and type your answer in. Even if the stock's in an uptrend, even if it's undervalued, and I haven't even checked that. But when a stock is at the ceiling, is that the time to enter in? If it's undervalued, if it's got great fundamentals, would we get into a stock when it hits the ceiling? Yes or no? And what do we have? No. We don't get into a stock when it's at its high. We wait for it to come back. And oftentimes you can still, it can be in an uptrend and you can still get in, but you're you're going to have it pull back a little bit. You're going to lose a little bit of money before you come back and make it. So we like to see it come back, pull back. It's called essentially a pullback or taking a breath. We like to see that happen so that we can save a little bit of money on our trades. So now let's get into candlesticks. I want to show you how to read a candlestick chart. So when you look at, we use candlesticks on our website. And I'm going to show you the different type of charts. I'm going to show you the very first chart that everyone used in the beginning. But let me explain how to read this. So what we have, so the stock market, every single day it opens, ding, 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 ding. What time does that open? 9:30 East Coast, Eastern Standard Time frame. And it closes at what time? 4 o'clock. So it's about 6.5 hours, right? Every single day, stock market. So when we look at a candlestick, we can see that we have, now the reason these are called candlesticks is because essentially they look like a candle, right? So what we have at the bottom, when a candlestick is green, we look at the bottom and we have the opening price. So this is my opening of the day. And then what happens? Well, the stock market opens 9:30 in the morning. And then what happens? The stock goes up, down all day, up, down, up, down, up, down, up, down. And then it closes right here. So here, this is called an upper shadow or a wick. This is the high. This is how high the stock went all day. It was going up and down. This is as high as it went. This is how low it went. How low did the stock go? It went this low. It went down to here. So that's the low. So here's my high of the day. Here's my low of the day. Now, if a candlestick on both of these, we have the high, we have the low, called a lower shadow or an upper shadow. Some people call this a wick, or they may call the lower shadow a tail. So there's some different terminology there. So I've got my high and my low, my open and close. Now, if a candlestick is green, okay, if it is green, that means it opened low and it closed high. So here it opened low, closed high. We read it left to right. Open low, closed high, and it's a green candlestick. So here we are. Here's my high, here's my low. So I've just put a little box around the open and low. So here's where it opened, here's where it closed. How do I know that? Because it's green. It opened at the bottom, it closed at the top. If my candlestick is red, if it is red, that means it was a down day and it opened high and closed low. So on this candlestick, this is still the high of the day, this is still the low of the day, but on this candlestick, it actually opened up here. It went up, down, up, down, up, down all day and then closed here. So if my candlestick is red, it opened at the top of the box and closed at the bottom. If my candlestick is green, it opened at the bottom of the box and closed at the top. Now, this is helpful for a number of reasons. It really sees us what was going on intraday. In addition to that, if I look at a chart and I see 4 green candles, I know, just like that, oh, it's intuitive. It's been up for 4 days. I can see that instantly. So let me get back on the website and just show you a chart. We'll look at some different charts here. So I'm going to pull up a stock here. We're going to just look at Vail. And now I mentioned to you that the top of the very first chart that pops up. So right now for covered calls, you're not going to need this chart. Not yet. But as you start to trade options, when you take some of our additional courses and you learn how to make different rates of return, this will be very helpful for you. So right now we can see this chart, and this is a 5-day chart, and it's in candlesticks. But what I can do is if I come, so when I look at this, so let's just kind of go over this. We can see, okay, here's Vail. It's trading at 17.74. And here I can see, it just gives me all the information, the bid and the ask, it's up 6%. Here I have the date, I have the average volume, 40 million, and here we can see after hours what it's done. So this is just it's traded on the New York Stock Exchange, so it's kind of just showing me some overall information. Then, if I come down, I see the 5-day chart. So, there's March 1st, 2nd, 3rd, 4th, and 5th. So there we are. There's our 5-day. Now, looking right here to the right, you see where it says candlestick. And I can change this to, I just want to show you some different charts. So here is, instead of candlestick, let's look at a line chart. So a line chart, what a line chart does is a line chart, it was the first chart. Like when the stock market way in the beginning of time, they started with just a line chart. And so with a line chart, what it does is it plots the closing price every single day. So this is a 5-day, let's just look at maybe a 1 month. So here we are, here's a 1 month chart, and it is a line chart, and it's a 1 month time frame. It's giving me every single day where the stock closed. Every day, but it gives me where the stock closed, and then they just kind of bring the line together. So this is the closing price of the stock. Now below this, I have, actually, let's do this. Let me look at this. This is a 1 month chart as well. So these two charts are essentially, is this 1 month? Let me see if I have this. Yeah, I have this as 1 month. Now this is the candlestick chart, and this is my line chart, and it's actually the same chart. What I like about the candlestick chart is the candlestick chart gives me a lot more information. If all I see is the closing price, I don't know what happened intraday. So let's think about this for a moment. What if the stock opened here? Okay, so my stock opened, and then it actually went up, but then it sold off, right? So then it closed here. So when I look at it, I just see the stock just went up $3. It didn't go up much, or $2. When really in the middle of the day, the stock had gone up $5, $6, $7, $8. It tried to go up, but then it sold off. So what does that tell me? That tells me, without being able to see that, if all I see is the closing price, I don't know what happened in the middle of the day. And what that middle of the day tells me, intraday, it's actually called intraday. When I can see what happened intraday, I can anticipate what the stock is about to do. So if I see a lot of buyers coming in and I say, oh my gosh, they're really trying to push that stock up. Now they didn't succeed. It sold off, it came down, but what that tells me is, guess what? They're not going anywhere. They're going to be back tomorrow. And I can anticipate that the stock is getting ready to rally. All right, so that's what that tells me. So it's no different than, let's say that you go out of town for the weekend. You leave your kids at home. You're out of town for the weekend. You leave Friday. You come home Sunday. The house is perfect, right? It looks great. You go out of town. You come home Sunday, at noon, and the house is perfect. And you're like, oh, nice. The kids were here. The house looks great. Everything looks the same. But you have no idea of the 3, 4, 5 parties that were held at your house all weekend, the different kids that spent the night at your house, that swam in your pool. You don't even know that occurred. You don't know what happened, and it all happened because all you saw was the end. So we like to see, I know it's kind of an interesting analogy, but we just like to see what's happening in between time. I want to see the whole picture. So that's what candlesticks really gives us. So here I've got a line chart, and the line chart just doesn't give me quite enough information. I don't know where it opened. I don't know how high it went. I don't know how low it went, and I don't know where it closed. It just gives me the closing price. Now, there's also an area chart, and an area chart is essentially the line chart filled in, right? So this is another chart. It's another chart that people use, and now we have the area chart. It's essentially filled in. Now, a very popular chart before candlesticks, okay, was what is called the open, high, low, close. So my open, high, low, close is essentially a candlestick chart without the box filled in. So when you see this, the line on the left, because remember, we read charts always, we read a chart left to right, right? So left is the oldest piece of information, right is the most recent. And so when we're reading an open, high, low, close, which is all that was used for the longest period, we read it left to right. So this would be my open, this would be the low of the day, this is the high of the day, and this is my close. So this, on this particular line, it opened here and it closed here. And this would be a green candlestick, right? Here we can see it opened here, it closed here. But what about this line here? It opened high and it closed low. So this would have been a red candlestick. Red, opened high, closed low. Here we can see it opened high, closed low. This would have been red also. So why do I like candlesticks? I like candlesticks because I don't have to dissect this. I can just look at it and say, oh, that was an update, that was a down day. It makes it very, very simple. So I really like candlestick charts, and it just makes it easy for us. All of our charts by default go to candlesticks, and they all will default at a 6-month chart. And the reason we use 6 months is typically you're really not going to be in a trade much longer than 6 months. And yes, you may buy stocks long term, but if that stock changes direction, we are not a proponent of you're in it for the long haul. No, you're in it to make money. And when that changes, when the institutions start to move out or something like that, it's time to take your profits, protect what you've worked hard for, and then find another trade. So that is why. Now you can adjust that if you'd like. If you want to look at a 9-month or a 1-year or a 2-year, you can certainly adjust any of those. But what we look at by default is a 6-month time frame. That's what it goes to. All right, so that is candlesticks. Now, in our advanced technical course, one of the things you're going to learn is that these candlesticks actually, okay, so it was Steve Nissan that actually brought them from Japan. So in Japan, candlesticks were used to trade rice futures. And they did this for over 200 years. And do you think all they figured out in all of that time was, oh my gosh, there's an open and a close and a high and a low? No, they're much more complex, which is why I think you'll really appreciate the visual aspect of the advanced technical course, because there's patterns and things that you can see that you didn't even know existed, that once your eyes see them, they lock in. So I'm going to share a couple of them with you right now. Now, once we look at a candlestick, as I said, there is, actually let me pull this up here, and why is this doing this? Okay, so once we look at a candlestick, we can see that, hang on here, all right, we have, so there's several patterns with candlesticks, and this is all taught in our advanced technical course. And what you learn is there's certain formations that occur that tell you what's going to happen next, right? What's about to happen. And that's what we want to see, is what is about to happen. So right now I want to show you just one pattern that you can see. Here we go. Okay, so this is a pattern that's taught in our advanced technical course, and it is called a double top. So with a double top, you can see that this stock has been in an uptrend. It's going up, it's going down, it's going up, it's going down, so you can call it a double top. And a double top, next to that, go ahead and write down reversal. Because when you see a double top, it shows you, oh, the stock was trying to go higher. You said it was trying to go higher right here? And then it pulled back, kind of came up a little, tried again to break the ceiling. So here's my ceiling, right? Stock's trying to break the ceiling, not able to break the ceiling. That's called a double top. It's also called a reversal. Some people call it the death cross. I mean, it's just like, it tells you, oh my gosh, the stock is about to reverse potentially. So we have the double top here, and when you look at the double top, what is going on here? So when we look at our double top, we can see that it is there, and then hold for 1 second. All right, so you see the double top there. There's my double top. That tells me, and here's what you have to understand, that anyone that trades is very astute in technical analysis. And one thing that you'll like is you'll start to learn what the institutional traders are looking at when they trade. And all of that is taught in our advanced technical course, but you'll start to see what professionals are looking at. They see that, they know the stock's about to come down. And the next thing you know, look at that. that stock dropped 700 points in 6 weeks. And it was Amazon. How many people do you think saw Amazon and said, it's Amazon? So when it was pulling back here, they're like, but it's Amazon. It's a good stock. It's going to go up. But it's Amazon. And then it continued to fall. And that's why technical analysis, the advanced technical analysis course, is so powerful. It teaches you, and there's so many patterns like that. That's just one. That's a double top. But how much would that have saved you? Because so you got out here, maybe you got out, let's see here. This is stuck here for some reason. All right, so it is, okay, so we could have saved ourselves from that. I am going to take a 2-minute break. I've got an issue with my laptop, so just give me 1 second to correct it. So you can grab a glass of water. I just need to fix this so that we can kind of get through this class.
Do you need me for anything?
I don't think so. I just don't know what. It's not.
Escape. Go to your screen and escape.
Okay.
Escape.
Okay. So maybe.
Back in your airplane.
All right. That may have done it, but my clicker isn't working.
Just use your space bar.
Okay.
I can give you my mouse. That'll make it work.
No, I think we're good. I think we got it. I just needed a second to, there was like a screen that it was stuck on. Okay, we're back. All right. Welcome back. Okay, so now here we have the double top, as I just said. So you can see there's my double top. Okay, so a lot of people probably saw Amazon come down here, come down here, come down here, and they just stayed in it. Why? Because it's Amazon. But once you recognize that double top and you see that, you will know to get out, because you can see now the little sign language that professional traders are using with each other. They're like, hey, double top, time to get out. Boom, the stock falls, 700 points in 6 weeks. That's a pretty big drop, but that's where the education can really, really save you. So as we go through this, and this was kind of a great little message that we got, and it was, gotta say, the advanced technical class is fantastic. I highly recommend it. Oh my God, it's like getting those X-ray vision glasses and can see things like never before. And I love that, because that's exactly how I felt. So, it's really interesting when you get to a place where you have, think about the 3 pillars, because we're just in advanced technicals. That's the second pillar. But when you're at a place where you now know how to trade, okay, and I want you to think about, where does all the money come from? All the money for all the businesses, for all the politicians, all comes from Wall Street. That's where all the money is. That's what funds everything. Wall Street's not going anywhere. And there's a lot of money to be made. We've just never been taught how. So if you can go in and say, hey, I now know how to trade. So that's the first step, learning what strategies. Then my second step, I can read a chart. And then my third pillar, I can fix and repair a bad trade. Guess what? You're not afraid of the market anymore. It's hard to make money in the market if you're not investing in it. And when you are comfortable, like I know how to read a chart, I know how, if it goes against me, I can fix it, then all of a sudden you become a much more confident person. And when you're at a place where you're no longer dependent on anyone else for your money, your whole life changes. And I'm not saying you quit your job. Maybe you keep your job, but you know that no matter what happens, what state shuts down, what company, any of that, that you can take care of yourself and your family. It is a certain kind of peace and difference that you've just never felt before. So I highly encourage you. You'll really enjoy this. All right. So this is nice. This is a good one. Become better than your coach. So this is great because this is from one of our students who we have, as I mentioned, all of our trades that we do when we teach our courses are live trades with our real money in all of the courses that we teach. And there's a lot of different courses we have, but a lot of our students will follow along, right? And so this was kind of cute because she said, good morning, Stacy. You put your order in for 400, but I made mine more conservative. So what's nice is when we see our students grow to the point where they're not just following, but they're adjusting according to their personality. Because you're going to trade different than me. As I said, in technical analysis, all of those candlesticks, there's a lot of different patterns. You're going to find what style you like to trade. I'm very conservative. You might not be as conservative as me. You might be a little more aggressive, but you'll find what patterns fit most for your personality, your style of trading. And that's what's kind of cool about this is one of our students who adjusted the trade for her, right? She said, you put your order in for 400. I made mine more conservative. I'm a very conservative person, but I got a higher return. So she actually made it more conservative, but still made more money. And that's pretty cool. So she said, I got a higher credit because using advanced technicals, when I placed my trade, I got $1, got 1,050. Love this business. I like that it was a bearish trade. This is kind of cool too. It was a bearish trade placed in a bullish market. Knowing technicals allowed me to see the opportunity. So technical analysis, once you go through that course, it really changes your life. So I want to kind of give you an example of what I mean by that. I'm going to show you a slide right now, and it has a few symbols on it. I want you to tell me and type in the minute you see the arrow. So there's a few little symbols here. So there's an arrow. How fast can you find the arrow? What about the hat? There's a hat there. Do you see the hat? And this is a great example of what technical analysis is like, which is why I love it. I'm really a visual learner. Now, there's also a Native American nickel head, and there's also a word. Do you see the word that's there for you? Go ahead and type in the word if you see the word. The reason that I like technical analysis is being able to see a chart and know what it's about to do before it does it makes me more comfortable. I feel more comfortable. I feel safer. Like, okay, I know what is going to happen. I like that. So has anyone found the word yet? Do you guys see the word? It's right there. Anyone? This is technical analysis in its core, where you're able to see things other people can't see. Do we got it? All right, there it is. Fly, that is right. Now, for those of you that can't see it, here is my F, here is my L, here is my Y. If you're still having a hard time seeing it, I'm going to help you out and give you the floor and ceiling. So there's my support, there's my resistance, and there is fly. Now, here's what's cool. Once you have seen this, you can't unsee it. You'll always be able to see a double top now. You'll always see fly now because now you've been shown what it is. So what I'm about to do now is I'm going to share with you a very powerful candle that we teach in our advanced technical course, along with many others. But I'm going to go ahead and share that with you right now because it's very, very powerful. It's very simple to learn, and it can make you a lot of money. And it's something that you can start using immediately, especially after yesterday with the markets. So this will help you a lot. So what I'm about to share with you is, it's a candlestick and it's called a hammer, all right? So this is one of many that are taught in our advanced technical course, but this is why I love that class. So here we are. Here is a hammer. So go ahead and on your sheet of paper, I want you to write down and draw a hammer. For you're taking notes, write a hammer down. Now, next to it, write down, it's usually a reversal sign. Now, there's no color in this. So in your notes, please write down a hammer is color neutral. It can be black, it can be red, it can be green or red. It means the same thing, no matter what color it is. Think about it. I can go to Home Depot and I can buy a regular hammer with a wooden handle. It's a hammer. I can buy a pink hammer, which I think is really cute, but it's still a hammer, right? I can buy a blue hammer. It doesn't matter what color my hammer is, it's always still a hammer. So now what is a hammer? A hammer is a reversal, and it usually occurs at the top or bottom of a trend. Now, what we need to see happen is the next day, the stock has to close higher or lower than the hammer for the reversal to take effect. So what do I mean by that? Well, I've got a stock. I'm going down. I'm going down. I'm going down. Hammer. Next day it closes higher. My stock's about to rally. Okay? Now here, and notice here I have an upside down hammer. So it doesn't matter if the hammer is right side up or upside down, means the same thing. Doesn't matter if the hammer is red or green, means the same thing. A hammer is always a hammer. Whether it's right side up or upside down, it's a hammer. That's what it's called. That's what it is. So stock's going down, hammer, closes higher. That's my confirmation. I need that confirmation. Stock's about to rally. Here we've got stocks going down, hammer, right side up, closes higher, boom, closes higher, stock's about to rally. Here, I'm in an uptrend, right? I'm going up, hammer, closes below, the stock's about to pull back. Here I have going up, hammer, upside down, closes lower. We need that confirmation. The stock's about to pull back. So that is a hammer. So if we look at a chart, and let's see here. Let's look at, we can pull up, let's see here. Let's pull up, all right, we could even just look at this stock here. This stock, do you guys see this? It was going up. We've got that hammer, closed below, pulled back a little, but then what do we see here? A hammer, and what did it do? It reversed and went up. So the key is it has to close higher. There's my hammer, there it closed higher, and then the stock rallied all the way up. And we can see that. You'll see hammers, now that I've shown them to you, you'll see them, and they're very, very powerful. Very, very powerful. It's a powerful signal. Very powerful. Very powerful. And if we look at some of the different charts here, we can see, so let me just look at this chart here. Here we have this stock, and it's kind of going up, going down, going up, going down, and look at that. Now, hammers can often have a tail, so you should write that in your notes too, but do you see this hammer right here? Has a little bit of a wick or a tail. There's my hammer, stock closed below, and boom, look at that stock fall. So I've got my hammer here, and hammers are, you'll start to see them everywhere, and once again, it's very powerful, but we need the next day, the stock has to close higher or lower for the reversal to take effect. That's very important, but you'll see it all the time. So you will see hammers. Here we've got a hammer right here, and they happen at the bottom, and write this in your notes as well. When a hammer occurs at the bottom or the top of a trend, that's when they're the most powerful, and you can see the reversal effects. So right here, you can see that stock's coming down, hammer, and then the stock goes up, right? Here it comes down, there's my hammer, there it goes up. So this is super powerful, it will help you so much when you are trying to decide, hey, because here's the thing. Let's say a stock is going up. So let me kind of walk you through this. I have my stock. It's going up. Now my stock is it's at the top of the trend, right? It's at an uptrend. The stock opens here, and then it goes up, it comes down, but then it sells off. It goes way down here. It came way down here, but it didn't close here. It went back up. So that's my handle on my hammer, right? That's my handle. So I've got this handle here. It went way down here, but it closed back up here. Well, if you don't know that and you don't see what everybody else sees, because all the institutions, all the professional traders talk the same language, they know that's a double top. They know that's a hammer, and they're going to look at that. Even though it's still closed up here, they're going to say, wow, it's at the top of the trend, and there's a hammer. The stock is in a potential for a reversal. I'm just going to go ahead and sell and get my profits out. Now, if you don't know that, you're going to lose money, because it ultimately becomes a self-fulfilling prophecy, because everyone reads charts the same way. Everyone sees that hammer the same way. And that's where you end up getting one step ahead. So all of these things, right? Being able to understand the difference with support and resistance, when to get in. Guess what? See, if you can learn to read a signal faster before the reversal happens, you see it and you're able to do it, that can potentially save you $2, $3, $4, $5. Will you multiply that by 100, 200, 300, 1,000 shares? Now we're talking about a savings or making $2, $3, $4, $5,000 more than you would have because you didn't know how to read the chart properly. That's why I say, guys, take as many courses as you can on how to read a chart. You can never get too good at reading a chart. There's just no way, because the more you can read a chart, the more you understand it, the more money you're going to make. It's really that simple. So if we look at here, we can see a few hammers here. There's my hammer here. The stock rallied up, and then it comes down. We see we've got another hammer here, right there, and then the stock comes down. Then we've got a hammer here, goes back up. So you're going to see these hammers now, just like the double tops, and that's the thing. Once you see them, you can't unsee them. So just remember, with your hammer, and this is just one little piece of technical analysis, but with your hammer, the advanced technical course really teaches all of these different signals. In your advanced technical course, that's where you're going to learn to read all the patterns. I mean, there's many patterns. I just showed you the double top, but there's ascending triangles. There's the double bottom. There's the head and shoulders. There's all these different patterns, and everyone can read those, and they know how those patterns equal money and exactly what to do. So once again, you're really going to enjoy this. This is a great email we got. It says, you can pick up any book and learn the fundamentals of trading, but most of the advice just recommends getting out of a bad trade for a defined loss. They don't teach you how to adjust the trades. A trading book could cost you thousands of dollars in losses. And you know, Mike's written a book on trading. There's a lot. You can read a book on trading, but that is different than trading live with someone who is trading right next to you, and you're actually seeing what they're doing and following what they're doing, and they're teaching you, hey, when the trade goes against us, how do we repair the trade? That's what we specialize in here at Income Trader. Working with Stacy and Mike has shown me how professional traders can turn a bad trade into a profitable one, Bill. And here from Don Bean, FYI, I sold the 85 puts today at $5, closing the trade out for a 10-day profit of $550. All right. The analysis and the planning prior to entering created a good profit, even after the original trade went in the opposite direction. Remember, we cannot control what the market's going to do. We can do everything right. We can plan our trade. We can have our trading journal. We can say, I'm going to enter here. I'm going to get out here. If the trade does this, I'll do this. We can do all of the right planning. It's undervalued in an uptrend, but we can't control the market. But with our education, we can control how we respond when the trade doesn't go according to our original plan. So that's that third pillar, how to fix and repair a trade. And that's actually taught in our advanced options course. That's where we really teach how do we fix and repair trades. That's in that particular course, advanced options. So instead of a stop loss of 400, and I'm going to show you how to do a stop loss today, we reversed the trade for an actual profit. The money was great, but the education and mindset was even better. And you know, once again, when you have this down and you learn, guess what? It doesn't matter if I lose my job. It doesn't matter what happens with the economy. I know how to make money because the market's not going anywhere. It really changes your whole life. You really become a much more confident and capable person. It really enhances the quality of your life. So now that we've got that, let's see here. Where are we at? Okay, so any questions on any of that? Any questions? No questions so far? Okay. Then let's jump into how to, this for some reason keeps getting stuck and I don't know why. Okay, let's look at, a couple stocks. So let's go ahead. Why don't you guys give me some stocks you want to look at? Let's look at a couple stocks and evaluate them together before we go into our next section, which is funding the account. So let's jump into that. So Any stocks that somebody wants to look at, go ahead and type them in. In the meantime, I'm going to look at, let's look at Amazon and see how Amazon is doing. Do we have a stock from earlier or no?
Yeah, the ESPR. But somebody did want to know, how does that information you just talked about, how does it help us better with covered calls?
So with covered calls, we want to get into a stock. We're going to need to learn a good fundamental stock, right? So learning how to read a chart helps with every aspect of trading. So with a covered call, do you want to get into a covered call trade if you're ready to buy the stock, it's at the top of the trend, and it has a hammer? Are you going to buy that stock? Because remember, covered calls, what's the first step of covered calls? Buying the stock. Now, we don't want to buy a stock we're about to lose money on. So the first thing we do is we check our fundamentals. Is the stock strong fundamentally? Then we go into our technicals. Technicals are part of everything. Now, you've got enough technicals right now for covered calls. As we go through reading a chart, we want to just make sure it's in an uptrend. And ideally, we don't want to buy, even within the uptrend, we don't want to buy at the ceiling. We want to wait for it to pull back a little bit and then buy when it's coming up. So everything that I just showed you, if you are ready to buy a stock, and keep in mind, what I just shared with you is part of our advanced technical course, but I wanted to give you a little more, just a little more tools. So when you go to buy a stock, would you buy a stock if it had a double top? Well, if you were going to write a covered call, even if you rent out your stock, if the stock is losing money, it could potentially lose more money than you're going to make on that covered call. You're still going to be at a net loss. We don't want that. Does that make sense? Hopefully that makes sense for you. We want to get into stocks that are in good uptrends. So what symbol did you give me?
No, PTR.
PTR. Okay, so let's go through everything we have learned so far. Let's just start from the beginning. First thing we're looking at is, what trend is the stock in? Stock is in a really good uptrend. It was here. It was going sideways for quite some time, and then it just broke out. Now let's put our support and resistance lines back on so we can kind of see our floors and ceilings. And it just broke out of the ceiling. So it just broke out of the ceiling. We've got our Koval indicator. Now we just got a crossing. Now it's in the upper zone. We just got a new green arrow. It's crossed in the upper zone, but it is pretty high, right? So we know the Koval indicator, it can still move up, and our MACD has got a green arrow, and those are still going up. But keep in mind, they're in the upper zone. So we could potentially still see it go higher, but it is in its all-time high right now. So would this be, a good time to buy? Yeah, you could buy right now. Everything is giving us green, and it just broke out. So this would be good. Right? So we've got overall trend up and current trend up. So this is a good one. Very good. Okay, we'll just do two more. Do we have another one?
DAL.
DAL. DAL. Okay. Delta Airlines. Wow, the airlines have really had a hard time, haven't they? Okay, what's our current trend? Current trend up, overall trend up. Current trend, we've got a high, a lower high, a higher high, a low, a lower low. So our overall trend is a little mixed. And look at this, on our Koval indicator, if we look at this, we just got a red arrow. It's crossing, heading down, crossing, heading down. So this looks like now would not necessarily be the right time. Now this stock has hit its head and it's coming down. Do we have, if you had to guess, you guys type this in, if you had to guess what price, how far down do you think the stock is going to come? So it's hit its head, it's pulling back. Do you think it's going to kind of come probably right in here around 42? Because we have an old ceiling here, which will probably become the new support. So we have that. So now would not be the time to buy this. All right, let's look at, so overall trend up, current trend sideways, slightly coming down a bit, but kind of in a mixed. It's mixed. but our COVO indicator and our MACD are crossing over, heading down. So is this helping you guys in terms of feeling a little more comfortable on how to read the chart and knowing when to get in and get out? So go ahead and type in your answers. I just kind of want to make sure that this is starting to make sense to you. And because this is important, learning technical analysis, really important part of your education. All right, let's look at one more.
MGM.
MGM, okay. Oops, that went to Mom, which is probably a great stock because it is Mom. But let's see what MGM is. All right, MGM. All right, you guys tell me, what's my overall trend? Overall trend up. Current trend, I have a high, a higher high, a higher high. I have a low, a lower low, but then a higher low. So kind of sideways, overall up, kind of sideways, really seems to be trading within this range right here, support and resistance. And what do we have right here? Do you guys see this? That is a hammer. So we would wait and see what it's going to do. Now, do you see how it sold off? You remember how I just talked about this? It sold off, but it ended up closing higher, but the sellers are there. So we're going to see what's going to happen. Now, Monday, if it closes below, we know it's ready for a big pullback. And we'll see if it'll break through. It's got two levels of support here. So we'll see if it breaks through that, but that's definitely ready for a pullback. So any questions on technical analysis, current trend, overall trend, the different indicators, any questions before we move to the next section? So go ahead and type them in. See if everybody is okay there. And let's move through that. And let's get into funding. So no questions? Everyone's good? Everyone good? Good, good, good. How are we doing? I know we had our technical difficulties we're going to get through, but let's get through this because once we get through funding the account, we'll take a quick break, but then I want to show you how a third way to make money on your stock. So stock, covered calls, and dividends, and then my favorite, so technicals is my favorite, but my favorite is I want to show you options. And I'm pretty excited to show you just a little bit, just an intro to options on how that works as well. All right, funding your account. Now, when we fund an account, so you can have a business account, you can have a personal account, you can have a Roth IRA, or you can have a tax-deferred account. You can have any of those types of accounts. And you can actually, have your account with any broker you like. You can have it with Brokers Express or Options Express or E-Trade, Fidelity, Robinhood, a lot of people use. Now, I use TD Ameritrade. Everyone here uses TD Ameritrade. Mike was an officer at TD Ameritrade. You might want to, for those of you, when you start taking some of your additional courses, it'll be nice for you to have your screen look exactly like your coach's screen. So you might want to consider doing TD Ameritrade. It's what we use, and sometimes when you're learning, it's real easy if your screen matches your instructor's screen. So that makes it helpful. But you can open up an account with anyone you like. But we use TD Ameritrade. So when you open up an account, you're going to want to, and you can have a personal account or a business account. You can have an account that's paying bills. You have an account for retirement. Some of you may have 401ks from old companies. Those you can actually transfer into an IRA or Roth account, some type of an account where you can actually start to trade that. So a lot of people have money that they can trade with they don't even know they have. And that's what we kind of want to help you with, because as you start to trade, you're going to have family members and people around you saying, oh my gosh, you're making money. I want to make money. And it's like, okay, well, you actually have money to trade with you're not even aware of. Now, this is a great article. It says, Tony Robbins and Warren Buffett said, this is the best investment you'll ever make in your life. Both of these legendary businessmen say the best investment they ever made was not a stock or a financial asset. It was a class. Warren Buffett took a class on how to speak, did some public speaking. Tony Robbins, he took a class from Jim Rohn and actually learned how to speak. But the point is, it was an investment in themselves. And that's what we're doing right now. We're teaching you how to develop your skill for you to start to make money for the rest of your life. How can I start making not home runs, but conservative, consistent money compounded over time safely for the rest of my life? That's what we really teach here. Here, bad time for active managers. Almost none have beaten the S&P or have beaten the market over the last 15 years. Now, this is interesting because this article says this scorecard tracked a 15-year performance, which is really a complete market cycle, because just like stocks have cycles up, down, sideways, so do overall markets. 15 years will capture the uptrend, the downtrend, the sideways trend, and look at this. In that period, 92.2% of large cap managers missed the marks, well, the number was 95.4 for mid caps and 93 for small caps. It's probably no wonder that more than 58% of U.S. equity funds folded or merged in that 15-year time frame. So what that means is all of these fund managers failed. Now, why am I telling you this? Because I want you to make money. I want you to be rich. I want you to know that you deserve this and you can do more than, you can do better than your fund managers. You can do better than they can do. And just for you to understand, they are not working for you. Okay, you can learn just with your covered calls alone, you're going to do better than any fund manager out there just with this one skill. And the articles go on and on. So the point is that you can do better. You can do better than they can do. You really can. As a matter of fact, looking at this, tomorrow, Stacy is going to show you how some of you have mutual funds. She's going to show you how you can actually move that money to an exchange traded fund and start running covered calls on them. And, in addition to that, when you realize that if all you did from this whole class, and she's going to get into this tomorrow with you, is you bought one exchange traded fund, SPX, that one fund, that one exchange, SPY, excuse me, SPY, that one fund, you would actually do better because it's essentially the SPX. It's the exchange traded fund of the SPX, the SPYS. You would do better than 90% of all fund managers out there just by investing in that one exchange traded fund. So Stacy's going to get into exchange traded funds with you tomorrow, but I want you to understand you can do better, and it's worth the effort to just learn this. Just from this class alone, you're going to do far better than any fund manager will in your account. So why do we even look at leverage? And we look at leverage because the stock market has a 2-to-1 leverage, option trading's 10-to-1, futures 25-to-1, and Forex 50-to-1. So we're going to just kind of focus right here with stocks and options trading, but we're going to really look at the safe way to use leverage in the stock market. Have you ever heard the saying, it's easier for people with money to make money? Why is that? Because people with money know how to make money. That's why. Because they have learning to make money is a skill, right? So typically they see money and they look at a situation and they say, how can I make money? And they do it. And they teach their kids this. Have you ever heard people say things like, you know what, I like this. I think I'm going to try this first. Well, is that really positive? Because when you say you're going to try something, you kind of give yourself a backdoor out, don't you? Like, I don't know, I'm just going to try it. And then it's like, oh, I tried, it didn't work. But if you have a belief and you're committed and you say, I'm going to do this and I'm going to succeed, how much more effort do you put in versus I think I'll just try? Right, so it's really a mindset thing, and mindset is a big part of investing in the market. So the rich have learned the use of the power of leverage. They use it in everyday situations for the creation of wealth, and they learn to use it conservatively to increase their wealth without increasing their risk. Now, we are teaching you the conservative way to use leverage, the conservative way to use options. That is what we teach. Now, are there ways where you can take a whole lot of risk and make a whole lot of return? Yeah, that's out there. We're not teaching that. We're advocating, how can I consistently be that little ant or be that single and double that wins the game? That's what we want to do. All right, the most important use of leverage is someone's own mind. I deserve to be rich. If you don't believe that you can trade the stock market, you'll never take the necessary steps to learn how. So it's important to start off with, I believe I can trade the market. I believe I deserve to be rich. It's very difficult to make money in the market if you're not investing in it, right? You have to get out there and invest. And that's why I really appreciate technical analysis. It makes you more comfortable. All right, they convince themselves that anything is possible. Their thoughts become their actions become their results. Now, how is leverage used? Well, leverage, we've talked about this. It's used in the stock market. It's used in your home. When you bought your home, you used leverage, right? You didn't go in and just pay 100% cash. Most people don't do that. You're using leverage. With your credit cards, you use leverage. Most people will use leverage with their car with the low interest rates. We use leverage all the time in our everyday lives. We just are not comfortable yet and have not learned how to use it properly in the stock market. And that's what we're teaching you. So with the stock market, we use leverage. We can leverage real estate. We can leverage our relationships. So it's very important as you begin trading to start with a solid game plan. The rich have used the power of leverage and they use it in everyday situations conservatively. And that's the key. Covered calls is the conservative way to use leverage in the market and grow your wealth. Now, today I'm going to go through how to place a trade, how to actually go in. Right now, we're going to look at how do I buy a stock, right? That's what I want to show you today. How do I buy a stock? And then tomorrow, Stacy's going to pick up and say, okay, now that I've bought the stock, how do I write a covered call on the stock to make my, 2% a month or whatever that may be? And then she's also going to show you a cash spread where you take that very stock you could have written the covered call on, and instead of making 2%, maybe make 15 or 20%, same stock, same time frame. So there's a lot of ways to start making your money work for you. Keep in mind, the rich are rich because they've learned how to make their money work for them instead of trading time for money, which is what we're taught. All right, so what do we have? Start with the proper game plan. So a lot of people don't realize they have money. Now, this is, a lot of you might have an old brokerage account, an old 401k, an RSP from an old job. You have money sitting in a savings account right now. Money is really depreciating. So you could put that money into a trading account and start making it work for you. Now, as you start trading, you're going to have, and as you get gains, I promise you this is going to happen. You're going to have family members say, oh my gosh, I want to trade. How are you doing this? I want some money. I don't have an old 401k. What do I do? And this is where, and this is for them. This really isn't, this section is kind of more for them, not you. But you can say, well, gosh, do you have an old workout machine you're not using? Throw it up on Craigslist. Do you have, people are selling clothes. They're doing all kinds of things. So there's a lot of things we're not using right now we could liquidate to fund our trading account. So keep all of that in mind. So there's lots of ways. So yes, the rich learn to use it conservatively to increase wealth, and this is the key, without increasing risk. And that's what we want to teach you, without increasing risk. How do we create wealth without increasing risk? All right. So we want to treat this as a business. That's what we want to do. So you can do one trade in your retirement account. A lot of people don't understand, and I'm not advocating, number one, I talk about growing your education, and I'm not saying quit your job tomorrow or anything like that, but you may have a 401k and people tell you you can't borrow from your 401k. That is not true. You can pull money out of your 401k for 60 days with no penalties and then put it back in. You can borrow from your 401k so you're essentially borrowing from yourself at a low interest rate. Now, if you actually are trading with us and consistently growing your profits month after month after month and understanding this, I wouldn't be opposed to saying, okay, now that you've got this skill and you have a track record, go ahead, pull money out of your account for 60 days, place a couple trades, grow it, put the principal back in, and keep the profits. So we have to start thinking out of the box. How do we make our money work for us? And you can talk to your coaches about this. Your coaches are going to be great for this. They can kind of walk you through some different ways to do this. But you definitely are going to want to, open up a self-directed account, filling out the paperwork, all of that as we move forward. You'll want to open up a 401k or open up an IRA, a Roth, things like that. So if you're contributing to your 401k and it's not growing, you have to ask yourself, why are you doing this? Are you better opening up your own retirement account and starting to contribute to that? Now, I understand if your employer is matching that, that's fine. But if it's losing money, you can always move it to cash and have them still contribute. And then borrow from that and make some trades and put it back in. So I just want you to think of ways to start preparing yourself for retirement. That's what we're trying to do here. How do we get you prepared for retirement? So once again, borrow funds from your 401k, just a small amount. There's no penalties. You can also borrow and take a loan out, and it's about 5% a year if you want to borrow and trade with that as well. And, this is how with a Roth, all of your growth is 100% tax-free. So we want to make sure that you have that. And a lot of people will say, why do I even want to trade? And hopefully this isn't you, but if you're doing well, because I have people say that, you know what, I'm really good financially. I don't need this. I've got my life set. I've been at my job for 20 years. I've got several million in a retirement. I'm good to go. I don't need to learn this. And the answer to that is, well, good for you. You're set. Is your wife set? Are your kids set? What about your great-grandkids? What about all your future generations? Understand that if there is somebody wealthy, it is because someone in a previous generation created wealth and it was able to be passed down. What type of legacy are you creating? What are you doing for future generations? So this isn't just about you. Learning how to make your money start working and it's actually not that hard. It's just when you learn the skill, you'd be amazed at how quickly this happens. So now when we look at when to enter a trade, right? So what do we want to do? Just overall, in your notes, you want to say, when do I get into a trade? I want to get into it when the stock is in an uptrend and it's bouncing off support, right? So we want to see it bouncing off support. We'd like to see 3 green arrows, 1, 2, 3, or a technical breakout, meaning it just broke. So in my price chart, the top one, the arrow is further back, but it just broke out of a ceiling. So I've got a technical breakout. Once again, in your technical advanced classes, you'll be able to recognize those a lot more quickly. So if I look at this stock here, I can see I've got 1, 2, 3 green arrows, right? So if I was going to place a trade on that, I would go in and I would say, okay, I'm going to buy the stock. Now, when you go to place an order, and I'm going to do this live in a minute, but I have a slide here as well, I've got a choice. I can buy or I can sell, right? So I would just put in, okay, I'm going to buy this stock, 100 shares. Now, when we buy stocks, we always like to buy in 100 share increments. Why? Because this is a covered call class, right? And in order for you to write a covered call on your stock, you have to own a minimum of 100 shares. You have to own 100 shares. Now, they're in 100 share lots. So for every 100 shares, you're able to write one covered call. So it doesn't do you any good to buy 80 shares of a stock or 110 shares, right? You want to buy in 100, 200, 300, so that I can start making my money work for me. Not only is my money growing as the stock is growing, but I'm writing covered calls on my stocks as they're growing. So 100 shares, all right? So I want to buy 100 shares, and the price, here I've got the price, is $71.99, and I'm doing a limit order. Now, I can do a limit order, and a limit order means I choose the price. I choose the price. Now, I can do a market order. A market order means I just want to get filled. I don't care what the price is. Now, most of your trades will be placed at night and be filled in the morning, right? So this isn't one thing that I really appreciate about covered calls is it's one of those things where I start to make my money work for me, but guess what? I have a life. I'm not in front of my computer all day. I'm not trading all day. It's something that is very manageable that I can just do 10 or 15 minutes a day in the evening, or if I want when the market's open, but it's not overly time consuming, which is nice. But here's the thing. I don't want to do a market order because if I do a market order, I'm saying the market can fill it at any price they want. No, I want to choose the price. So write down limit order. We always want to choose our price. It's a picture. I cannot. Can they still, you can't see that? Some people.
When you go live, you can change it. You can go live to whatever. When we do live tomorrow, we can expand it.
When Stacy goes live tomorrow, she'll expand that. I am going to go live on the brokerage account in a moment. And I don't know. I don't think I can actually make it live on the brokerage account either. A magnifier.
No, usually about one of those overpriced apples.
Yeah. Do I have? Yeah, I don't think I can make this. Let me just see here. All right, give me 1 second. Let me see something here. Let me. See if that helps. Let's see. This may help for you guys that can't see it. Let's just see if this helps you. Is that better? See that a little better there for you? So that is limit and $71.99. All right, so there's the stock symbol. There's the limit price. You'll have a choice between limit or market. And we're doing a limit price, $71.99.
It's called Command Plus on that.
Oh, it is? Oh, nice. Let's see here.
Command Plus.
I think that's when you're not on a PowerPoint.
Also,
Yeah, it's when you're probably live.
that's much better. Yeah.
Yeah, good. Okay, so there we go. All right, so there it is. So we can see that. So we're doing limit order. Remember, we could do market order. What does market order mean? Market order means they're choosing the price. Limit order means I want to get into this stock at $71.99 or better, meaning if the stock opens and it's $71, I'll get filled. If it's $69, I'll get filled, right? And a limit order, we're also doing a day order. It's for 1 day, 1 trading day. So what does that mean? That means from the moment the market opens until 4 o'clock, anytime throughout that day, if it hits this price, it'll get filled. So don't be discouraged if you put your order in and, it opens at 73. And you're like, oh, I didn't get filled. Don't adjust it necessarily right then because the stock, remember, it's moving up and down all day. You have all day to get filled. Now, if I place an order at 2 o'clock for a day order, guess what? I have 2 hours to get filled. It's for that day only. So the trades are for 1 day only because we're doing day only trades. And I'll show you that when we go live there. All right, so we buy that, 100 shares. Now, why do we do 100 shares? Oh, because we're going to write covered calls because we want to get paid on the stocks we own because we want our money working for us, which means we want to make money more than one way when we invest. Very good. All right, so next we want to, now this is going to be how to put in a stop loss. We want to identify strong support. So we can see support is right here at just under 70, so maybe 69.50, 69.60, 69.70, somewhere in there, right above there is a strong level of support. So if we were going to put in a stop loss, we would go in and we would exit at 3 red arrows when the stock breaks support, breaks below the moving average on high volume. So we always check our volume to see what the institutions are doing, right? Or the price gaps down. So we place a stop loss, 5% below support. So in this case, we saw support was just under 70, and we could put our stop loss. Let me see if I can make this one bigger for you guys too, so you can see it. Let's see. we're going to do a sell. And tell me if you guys can see this okay. Can you see it okay? Or do I need to make it bigger? Mike? Oh, okay. Perfect. So we have a sell. So we're going to sell. Remember, before we did buy. Now we're doing a sell. 100 shares. There's our symbol. And our price is 69. Limit. And you need to be able to see that it is good till close. You can't really see that. So let's see if we can get that in there as well. All right, so I've expanded this a little bit so that you can see it. Hang on, let me make one more quick adjustment and see if this helps. Okay, this hopefully will do it. Okay, here we go. So we identified support. We're putting our stop loss in a little below support. So we are selling 100 shares. There's the stock. Our price is 69. It's a limit order, and it's good to close. Good to close means I've just put in, think of your stop loss like a safety belt. I just put in a safety belt. I don't think I'm going to crash. I'm not planning on crashing. I'm driving every day. But if something unexpected happens and I crash, I have my safety belt on. I've got an airbag. I'm protected. If something were to happen and that stock starts to come down, I'm going to be sold at $69 and lock in my profit. So when you think of sell orders, what we're doing is we are essentially locking in our profit, protecting the profits we've made. So we will follow support and resistance. Once again, why is technical analysis so critical? Because you learn more and more about the different charts, the different symbols, the different candlestick formations, the different patterns, and what the stock is going to do. So that's what we want to do here. So is there any questions on any of this? And can you guys see this all okay? Everyone can see that? All right, so I just want to show you how to buy a stock, because tomorrow, now that we've gone through buying a stock, Stacey's going to go to the next step, which is now that we've bought our 100 shares of stock, how do we go in and actually write a covered call on that? You're going to have your homework tonight, and she's actually going to use stocks from your homework. So I'm going to give you homework tonight. Stocks from your homework to find the covered calls. And she's also going to take that same stock. Now, your covered calls will give you about 2 to 3% a month. She's going to take that same stock and show you how to do a cash spread on it, where now you're making 15 or 20% on the same stock. So we want to make sure, and she's pretty strict on homework, so we want to make sure you're good with that. All right, so that is how to buy a stock. Now, we are going to take a quick break. It is 4:41 here, so we'll take a break till 4:30. And then we will be back. And next, which is really fun, is we're going to look at, we've got our stock. We're writing covered calls. Now let's make money quarterly. So let's make money long term. Let's make money each month, and let's get paid again and make money quarterly. And I'm going to show you simple things you can do to just start getting paid quarterly. And that's going to be in our dividends segment. And then we're going to do options. So we're going to take a quick break until 4:30. Actually, we'll go 4:31, 4:32. So we'll take a good 10 minutes. So we see you back here in 10 minutes. Hope you've enjoyed this so far.